Hello guys, and welcome to today's training. Today we are just going to be talking about the various moves in the market. When I say various moves in the market, we have three major ways price move. We have the uptrend, the downtrend, then lastly the um, sideways movement. So how do we get to know if price is moving upward? What are the factors that makes us to say, okay, this price or this movement is for up? And why do we say price is moving down? And what do we see? I would say price is moving sideways. It's not just by viewing. Sometimes you might view and make mistake because price might be ranging in a lower time frame, higher time frame. And when you check lower time frame, it will look like it's giving you or it's trending. So sometimes you have to be specific. That's why you do your analysis from the higher time frame down to the lower time frame. You don't do it from the lower time frame up to the higher time frame because when you're doing it from the lower time frame, you might miss it. Yes, price might be ranging in the lower time frame. It might look like it's ranging in the lower time frame, whereas in the higher time frame, it's just a correcting phase of a particular zone. So now, how can you see or how can you identify such moves in the market? Now, for up move, what do we see before we say price is moving in an up move? You will see something like this. Please don't mind my drawing if it's not that clear because I just have to make this with this. I just have to give you an example, most especially for those who are new into the platform, so that you don't look strange to you when you are seeing it, when you open your chart. Now, what happens here is price create what we call higher high, create higher high. When price is moving up, it creates higher high. The current high will be higher than the previous high, while the current low will be higher than the previous low. So these are uh, attributes attributes of an uptrend. So what we see now is when you have your higher high, here becomes our higher low. Here becomes our higher high, and we have higher low. Then we have another higher high here. We have higher high. Then we have lastly we have higher low, higher low. So this is how price move. Then what do we what are other factors again is you notice what we call the BOS, that is break of structure. BOS. So we have BOS. For price to create a higher high, there must be a break of structure. BOS. Then BOS. So these um, are the attributes of an uptrend. Price will create a high, an impulse move. When it gives you an impulse move, then it comes back, it gives you a correction phase. That is in form of descending down. It won't break the previous low. No, it won't break the previous low. Rather, it will only make a correction phase. Then the next thing is create another impulse move, correction phase, impulse move. So this is one of the attributes, or these are the attributes of a, a bullish trend. It is called a bullish trend or an uptrend. So when you hear somebody saying bullish, it means something that is pushing up, something moving in an upward uh, way. So for the uptrend, we have price create higher high and higher low. What it means that this low here, this low here is higher than this low here. Why this one here is higher than this one here? This high here is higher than this here, and this one is higher. So you'll be seeing higher high, lower high. Then the opposite is for a bearish move. The opposite happens, yeah, in a bearish move. So now let me give you an example of the bearish move. So in bearish move, this is what we usually see price do. So all these points is called lower high, lower high, lower high. Why here is called the lower low, lower low, lower low. So price is what? Falling. It will give you an impulse move upward. The next thing, impulse move downward, then correction phase or correcting phase upward. Impulse move downward, correction phase upward. Impulse move downward, correction phase upward. So at this point, we start getting our break of structure, which is BOS. We have another one here, BOS. Then we have here BOS. That is break of structure, break of market structure. So whichever one you see in any position, then we have areas like higher low, lower low, higher low, then lower low, higher low, then lower low. So these are what the uptrend and downtrend. Remember I told you that for the uptrend, we call it a bullish move, an uptrend. Then for the downtrend, we call it a bearish move or a downtrend. So these are what price does. This is two-way, and the last way or last format price move is called the sideways. It's called sideways movement. It's called sideways movement, whereby what you just see is price is not moving up. It will not give you a higher high, neither will it give you a lower low. Rather, it will give you what we call equal high, equal low, equal high, equal low, equal high, equal low. That is what you'll be seeing when you open your chart. That means you see a bearish candle going down, the next thing again, it will not go too far, another bullish candle will come up. So these are what occurs in a ranging market. So in a ranging market, price moves sideways, and at this point we say price is indecisive. There's an indecision in the market. So for us to know that there's a decision, we are waiting for price to either break this support zone or break above the resistance zone, then create a break of structure, let it retest, then we take a buy from that point. So these are what occurs in trade. Whenever you open a chart, this is what happens. So this one is called, this is called the, sorry, this is called uptrend, uptrend, or bullish, bullish trend, bullish trend. Why this one is called the downtrend, downtrend, or bearish, bearish trend. So why this one is called a consolidation or sideways move. We call it a consolidation or sideways move or sideways trend. So when here they says or range, we can say the market is ranging. That means it is just giving us a sideways move or it's consolidating. So you wait for a decision to be made for price to break out. And take note, how do you know a fake breakout? A fake breakout will not give you a BOS. So for those of you who have the software, it will not give you a BOS. It will not give, it will just break out. The next thing, it will fall back into this into the, it will go inside the trend or the ranging this again. It will not give you a break, it will not give you a BOS. So and that is why we say you should wait for a break of structure, then let price come to that uh what is it called, other block. If it is downward, wait for it to price to come to the other block, let it retest it before you take your buy, so that you don't fall victim of fake breakouts. So that is the essence of those software you have. This thing will help you not to enter into fake breakout, not to take fake breakout entry. So please, I urge you to kindly go and watch all these things. View your charts. You see them every day. It must take place in a particular currency or particular pair. So when it comes to play, don't let it take you unaware, because you need to be informed so that you don't get the form. So when you see them on your chart, make sure you can easily identify them. So these are the major three ways price move in the trend. So when price is giving you what is it called, an uptrend, whenever it creates a BOS, now this is our, in the case of trend, this is our area of interest. For a bullish move, we are waiting for price after this BOS. When price move up, we want, before we take a buy, we want to see price come into this zone. We want to see price fall back here in a lower time frame. On higher time frame, if this is the bullish order block that took up price all the way up, so when price is coming, we want to see price come to this zone, then we go back to lower time frame, then we wait for it to create a BOS, then let it retest. As it's retesting, we know that that of the higher time frame is going to be effective. Then we take our buy. That is called sniper entry. We take our buy before then we exit before the market decide to either continue upward or downward. So that is the essence of taking your analysis from higher time frame, then taking your entry on a lower time frame, because it will not take you unaware. And even though you are losing, you will not lose too much, because when you take your trade here in lower time frame, your stop loss will be at the swing low. Hmm? Your stop loss will be at the swing low, then your exit will be at the swing high of your lower time frame, so it will be safer there. But remember, if your higher time frame has not gotten to the area of interest that is being highlighted by your software, Don't assume. Price can do anything. Price can decide anytime to take any direction. So let it fall into that zone of interest or area of interest. Wait on lower time frame. Go to lower time frame like 5 minutes, 15 minutes. Let's see the reaction of price. Let it indicate that it's trying to move upward, because that zone there are orders that is still left that is going to be taken. So as you are in your lower time frame and you get the confirmation, then you execute the trade. If it even fails you, you won't lose much. That is the essence of doing your analysis on a higher time frame, because you can't compare uh the the formation of higher time frame is more than that of the lower time frame. That means the power. You can't take the support zone of higher time frame is stronger than that of the lower time frame. So it will not affect your equity that much. And avoid late entry when it has occurred. Look for a specific one that you cited and you followed up. Some of you will still want to force yourself into trades that have already taken place already. You still want to just by all means push in. It is very risky. It is very, very risky. So that is that on that aspect. So you wait for it in your higher time frame of 1 hour, 4 hours, let it come to that zone. As its price is approaching that zone, then you go to a lower time frame. We want to see a change of character or change. Just let's see something that is going to give us up move setup. So when you have your BOS in your lower time frame, so you are waiting for that price to come in line with what is happening in higher time frame. So when it align with it, then you take your entry. Then you exit the market at your um what is it called, at your swing high. That means if you are buying, you take your buy, put your stop loss at the swing low, then take your take profit at the swing high, so that you scalp at least reasonable amount, then you are out of the market. Because the essence of trading is making profit, nothing more. Don't copy anybody's format or whatsoever. Just do what you understand and what is working for you perfectly. So that is that one aside. So that is it. You have all the software in your possession to guide you through. You only need patience and a very let's say patient. That is all, and don't be greedy. That is what you need to execute your trade. So let's quickly go to the chart and let me show you some things that I have here. Um, Now this is a crash 1000. Something happened earlier on today, so it gave me an I just felt let me just take record so that for those of you who might experience it next time, you won't feel bad. So it was on H1 at first. I noticed price was at the support zone. I noticed price was at the support zone. You know, when I told you that support zone, I want to see at least two confirmation. Let me zoom up. Okay, it is still showing. Now the first confirmation was one. I noticed price crossed below this our um pivot line, support line. You can see that is the first one. So when price crossed down below it and it approached our it was two times it occurred. So it was the second one I noticed, because the first one I didn't notice this move, I didn't notice it earlier. So it was this second one I was able to capture. So it approached the Fibo support and resistance, which is this red line. It's not showing boldly, but that is it over there. So I went down to 5 minute time frame. When price got there again, I went down to 5 minute time frame. So I was waiting for price to give me a bullish move to see if it's going to work, if that place is okay. So what I noticed was price moved. You can see. Okay, sorry. Yes, it's that is this is the move. This is what I saw. Good. Let me zoom it in a bit. Uh-huh. So this was the move. I noticed price gave a serious move. You can see it came here. This area acted as resistance. That is the uh, perfect zone. It acted as resistance. All I wanted to see is a break in structure. That is break of structure. That is BOS. So funny enough, price moved and it showed me a break of structure. Immediately there was a break of structure, I now picked interest more. I now picked interest more. And already I know that when price approach this zone, price must depreciate. Suppose the price must fall back. So I was just watching it. It took some hours though, but before you know, the price dropped, and came back to my other block, right? And this bearish candle that gave us our like, you can see it is very long. So the gap, the fair value gap there is very minimal. And this area which was acting as resistance before became a support. And aside that, you can see the trend line. So there was so much confirmation here that this is a perfect area to take my buy. Since this is my swing high and price got a immediately this bearish candle close, I took a buy and this was my target because this is a swing high, main swing high. So and in your Fibonacci, this should be around your 61 level or 50 level. Yes, it should be around 61 because at this point should be 50, level 50. Then here will be 61. So I hold it up to this level, and this move gave up at least up to $5 or so. This is boom 500, boom 1000, crash 1000. So you can see I'm not scared because even if price falls below this zone, what I'll be losing is not much, and I did not open multiple trades, so you can strategically target $5-10 daily just with one single trade. Those trades that give you the perfect entry, either on boom or crash, you can take them and you get your $5 to $10 daily without any stress. So immediately it delivered. As I was very satisfied because you can see the support zone was reflecting here. So all I needed was a break of structure which took place. I want price to fall to that place, indicating yes, this is the perfect area. And indeed, price came into it. And what next? I executed my trade. So this is why I said you should always do your analysis. Look for areas of interest in the higher time frame. Come down to lower time frame. See, watch how price is moving. If it falls back to your area of interest, then you execute your trade. Use higher time frame for lower time frame, then you get it 1 hour, 5 minutes, 15 minutes. These are the best. Your analysis should be on 1 hour. Take your point of interest on 1 hour. When price approaches area of interest, come down to what is it called, 5 minutes. Let price give you the move, then you execute your trade. So this is the main reason why I said when you are doing this, make sure you do your analysis properly, then be patient. So that is all. I think this is a wrap. In the next class, I'll still be showing you or I'll be explaining some other detailed information you need to really make it in this deriv platform because I enjoy it. Why? Because we don't have factors like news and the manipulation that usually occur in forex. So here it is a pure trade between you and the system. So it is not between you and anybody. That is why some people will tell you they are scared, they can't trade their daily because there's manipulation. There's manipulation, but the manipulation is not as worst as that of the forex. Yes, because the big players there can do anything. You can do your calculation, everything at the end of the day, you still miss it. I'm not saying you get it perfectly here, but the pressure here is lesser compared to that of a forex. So please kindly make sure you go through all these videos, watch them, pay attention. Then if you have question, you can just message me, then I'll put you through those key areas that is confusing to you. All right, I'm going to call it a wrap here. See you in the next class. So I think this is a very good lesson for today. For those of you who are new, must have benefited one or two things from this class. So cheers and thanks.